The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, Phil Tarrant, host Smart Property Investment Show. I hope you're well. Busy, lots going on. Changes are afoot. I have a very good relationship with change. I like change. I look to harness, embrace change. And one of the biggest changes that's happened over the last week, primarily in connection with Australia's emergence from COVID-19, is that our new Premier here in New South Wales, he's been in the seat now for nearly a couple of weeks. He's just announced he's having another child, his seventh. No, he's not messing around. That he jumped the gun and pretty much said, I'm opening up this joint, New South Wales, we're talking about here. I'm opening up the joint and I want to get New South Wales moving again. We're bringing forward some of the COVID restriction changes. They're all happening. My kids went back to school a week earlier than what they thought they would. We now don't need to wear masks in offices. You're allowed to get together outside with a whole bunch of people. Things are now moving back to some sense of normal, and you've got a big advocate in the Premier, previously Treasurer, who was also on it at that point in time to make this happen. But he came out of the blocks last week, and you would have seen it on smartpropertyinvestment.com.au saying, hey, New South Wales is open for business. International travel has come back. I think he then got a phone call from the Prime Minister saying, whoa, hey, hang on a second. Yeah, we actually control the borders. You probably need to wait for us to tell you what's going on. We love your intent to try and get Australia moving again, but let's be a little bit more measured about it. But what we now know is that international travel, not for all, for some, and that is residents and family of residents here in Australia or citizens can start coming in here probably in a couple of weeks' time, in November, sort of first week or so. So that's crazy. That's mad. But it's a big step change into the direction and the speed at which we can navigate our emergence out of COVID-19, point number one. Point number two, it also telegraphs what will be a significant change, and that is to support Australia's economic recovery as a result of COVID-19. Remember, that's a health pandemic that became a economic crisis, and you would have heard it just last week, discussion on smartpropertyinvestment.com.au with one of our directors at Momentum Media here, the co-investor in the Smart Property Investment portfolio, Alice Whitlock, had a chat firsthand with the Treasurer, Josh Frydenberg, specifically around this, emerging out of COVID-19. We need to get the economy moving, and to do that, we need to open up the borders in some capacity to get talented people into Australia. So I'm talking about migration. I think you're going to see a boom period over the coming period. So international travel is resuming. So what does that mean for property markets? It is a property show. This is not a economic show. It's not a travel show. It's not an aviation show. We sort of cover all those things because everything pretty much in Australia is a property story, because that's Australia's love affair with property. Joining me in the studio to work out what's going to happen with travel kicking off, and as a extension to that, the return of migration into this great nation that many people from around the world like to call home. Steve Waters, he's one of the directors at the Right Property Group, regular guest on the Smart Property Investment Show. Steve, long-winded conversation, long-winded introduction, but we're set to have a chat around this. Is there going to be any impact at all in property markets as a result of the opening of borders? Yes or no? Simplest question we'll ever get.
Yeah, short answer, yes. I didn't want to sort of your long-winded intro. I just thought, I'll keep it short. Yes.
Okay, well, that's Steve Waters from Right Property Group. Thanks for joining us, everyone. Propertyinvestment.com.au. Thanks. Remember, give us a review. Best sort of content you're ever going to get. But we've been waiting in the wings. Like this pandemic, we think back to March of 2020 is when the borders went up. There's an iron curtain was put up right across Australia, and it's been very difficult
It has.
come in and
It
out
has, and
of
it's
the
made.
nation.
There's been dramatic effects, good and bad, clearly, throughout not just the people's health globally and localized, but also the economy. And there's been winners and losers out of that. As to when those international borders open up, will there be winners and losers out of that as well? And I found it interesting that our new glorious state, New South Wales Premier, he was very quick out of the blocks, but I think that was quite deliberate. I think all the state premiers, more so probably Victoria and New South Wales, are going to be jostling for the lion's share of open border policy and immigration that follows thereafter. Everybody wants them. That everybody understands clearly that it's a necessity for the economy to recover, and ultimately that will have an amazing and a massive effect on accommodation and therefore residential property.
Yeah, and I know there's statistics around this, and I am not too familiar with them, but I'll generalise it. Where a new to Australian migrant and their families land is typically where they hang out for the first period of time. I know 3 to 4 years, call it, and they normally rent in the western suburbs of Sydney, and that is just why. If it is Sydney, that's what happens, and that's what happens. And they get themselves sorted out. They find jobs. They get their kids in schools. They start working out the lie of the land. They rent, and then at a point in time, the great Australian aspiration, they want to buy a property, and sometimes that's when they move, and they move to a different location, different state, whatever it is. So, if New South Wales is first to say, welcome one and all, come to Australia, the lucky country, start here, New South Wales, what does that mean? It means you're getting a lot more people to actually support economic growth, infrastructure development, all the jobs that need filling in order to power this economy, state economy moving forward and subsequent to the Australian economy. So it's green fields, and I can see why the New South Wales Premier is quick off the mark. He was a treasurer, so he knows the numbers, he knows the deal. He's got a head start. Correct. But you would have seen only last night, Steve, we're recording this on a Tuesday, the Queensland Premier come out, Premier Palaszczuk, saying, hey, we're going to open up now as well. We're moving on, and they had their health professional, the chief health scientist saying, we've got to they change the rhetoric completely. Now we've got to learn to live with the virus, and let's just do this. And if you feel sick, get tested, don't go to work. Let's learn to live with it. They've completely changed their tune because they know that they want to be attracting people up to that great state that is Queensland, good place.
Well, they don't want to be left behind, do they?
No.
And, people will very quickly learn new habits on where they should go to with their spare cash and their holiday free time. And if they're not allowed to go to Queensland, they'll go to Bali.
Fiji, it's nearly open.
Yeah, Fiji.
I think Fiji's going to open before Brisbane for New South Wales.
And it'd probably be cheaper as well.
Yeah,
but
the cocktails are so much sweeter as well, Steve. Up there at Denaroo Island somewhere, or one of the islands.
What's the mud drink? Kava. That's the one. Oh, it's it's pretty odd. But look, I think I actually don't see a downside in any of this. In terms of population growth, everybody needs a roof over their head, as the cliche goes, and there will be a follow-on effect. Now, we've talked about how there are some areas of Australia that are now leaning towards undersupply. And even in parts of Sydney, as an example, there is the very first indicators of an undersupply for accommodation happening. And if we do get that influx of people, and I'm being general here, to Sydney and its surrounds, we'll see an immediate effect. And because residential property to some degree also has a commercial filter upon it, in other words, the more it earns, the more it's worth, in metropolitan areas, we'll start to see the continued growth within residential real estate. However, the big sort of elephant in the room is if and when those levers are pulled with APRA once again to slow the housing sector down. So there's a real battle there in the background.
Yeah, there is. So in summary, the property markets will respond favourably to, number one, international borders reopening. And the first tranche of arrivals are going to be Australian citizens and residents who, for whatever reason, have been priced out coming back to Australia because they couldn't afford the flight, and or the fact that there just wasn't that many flights available. There was flights coming into Australia, but you need to remember during that period of time, there was a handful of people on those planes because yes, they could put them on a plane and send them down here, but of the way in which the quarantine system worked, New South Wales and the other states, but New South Wales took the brunt of it, the lion's share, could only accept so many more new people coming into the nation every single day. So therefore, not a lot of people on those planes. Now they can jam those planes full. If you're double vaccinated, you have a test prior to embarking on the plane, you don't need a quarantine anymore. So that's the reason why they're going to start pumping in people through the doors of Kingswood Smith Airport. So property markets will respond favourably. Do you think the initial uptake, Steve, will be hotel accommodation rather than rental accommodation? And where do you think those initial rental accommodations will take place? People aren't going to be coming back into a principal place of residence. Some people, to be fair, may have been renting out their principal place of residence while they've been living in London or New York, wherever it is. They might transition straight back into an owner-occupied residence. But where do you think the initial influx of rents are going to be? And are they going to be inner city locations? They're going to be western suburbs? They're going to be somewhere else? We're talking New South Wales centric here.
If we are talking about New South Wales and in particular Sydney, I don't think there's any one answer to that, because there's not going to be one demographic, dare I say it, type that are on those planes. So there'll be a mix. As you say, first of all, there'll be the expats or those that are trapped overseas looking to get back to Australia. And as time goes on and immigration becomes easier, well, we'll start to see those skilled migrants come into Australia, and they'll move wherever affordability is to them, is the short answer. And usually, historically, that's the affordable corridors of Melbourne and Sydney. And then as prices continue to escalate, now whether that be from a rental or a value point of view, they then have a choice to make if they're not tied to a community and a job, and let's go where it is more affordable. And we're seeing that now, actually. Is it to Brisbane? Is it to South Australia? Is it to Tassie? Is it to WA? And, is there work there? So there's imagine a big spiral event always cascading outwards, and it all starts in the epicenter, which is immigration. And then that will spin the economy wheel in combination with all the other factors that drive an economy. And growth is one of those things. Like, I'm not talking about asset growth. I'm talking about growth within the economy is what we're after. And look, to be fair, there's probably going to be a rebound as people have that mobility. They spend with a bit of freedom, and we'll start to see in a very short period of time, as all the states come out, the confidence indexes start to skyrocket up. We'll start to see probably a tick up in inflation as people go out and spend their hard-earned dollars and savings throughout the country. And, that will be the beginning of it. In other words, it's almost back to the future as we got out of our first quasi-lockdown when COVID first hit, and we had all those indicators, business confidence, consumer confidence, everything was through the roof. And then with the flick of a switch, it was
turned off.
Turned off and locked down.
So it was a big accelerator program, so strap in for this one. We're going to have a quick break. When we come back, will there be a flurry of investment activity? Who knows? Stay with us, back in a moment.
Are you wondering where to buy an investment property right now? Why not let Buyers take the guesswork out of it? We can find you the right place on or off market at the right price. An investment professional from our national network of buyers agents can help you save time, money and stress and deliver you a tailored solution. Talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
Welcome back, everyone. Phil Tarrant hosts Smart Property Investment Show with Steve Waters, the director of Rock Property Group, chatting through international borders reopening and what it means for Australia, specifically New South Wales, which is going to be the first cab off the rank, moving faster than what anyone thought. I've been following this very, very closely. Now, I'm talking about international travel next year, but it's going to be kicking off in November. And I don't think they're going to flip on that decision either. Qantas is now have flights for sale. We secured a flight for a family member just yesterday from London into Sydney, arriving middle of November, which we're really excited about. So it is happening. But this doesn't necessarily mean, Steve, that property markets are going to just go on a rapid growth trajectory immediately. There is an incubation period for people to get jobs, understand what's happening, at least 2-3 years, I believe, before we're going to start seeing any real impact on buying activity when it comes to investment property. However, good news for landlords who have rental accommodation in certain parts of Sydney. You should start seeing positive pressure on rents, do you think? And I'm thinking specifically around to where your clients at Rock Property Group probably own half of the western suburbs of Sydney. They'd be all looking forward to an uptick in rents. Yeah,
look, we've already seen that, to be fair. The vacancy rate is now under 3%, and I'm really being separate now between attached and detached. But we're also seeing the properties that we've helped clients secure over the years throughout the eastern suburbs and northern beaches, and if I bring detached and attached back into it, we've seen no downward trend in vacancy rates there, even in the midst of COVID. So it is a very, very compartmentalized markets throughout. You could probably break it down to 4 or 5 subsets between all the different property types and then their localized areas. But you mentioned that, there's an incubation period, and that's very, very true. Usually reactions are more in the moment, as we've seen during COVID. There's been plenty of markets that are probably more reactive in their nature, as opposed to an incubation period that's been in the making for 3 to 4 years. Immigration will have that incubation period attached to it, and we won't really see the solid results from that for probably 12 to 18 months, depending on the volume. If it's dribs and drabs, well, we're not going to really see too much of it. That'll be a slow sort of creep up in nature. But if the doors open with volume, well, then, that could be a sort of 12-month to 18-month period.
Yeah, it's got to be interesting to watch this play out. I think the question for property investors is, what do you do? Do you wait in the wings, or do you get into the market now? What sort of assets should you be buying on the basis that there is going to be population uplift? And indeed, if there is any actual interconnectivity between population growth and property price growth?
Well, there is, but there's also needs jobs. At the end of the day, jobs is a big piece of that picture. And thus the reason why people come, when they come into the country, they go to the major centres such as Sydney or Melbourne, and to some degree Brisbane, because there are jobs available. But there's also that lid on in terms of affordability as well. But I don't think we can forget that the government has said that we want to target the skilled migrants. And with that comes a degree of money and also skill set to recruit back into the localised economies and therefore the broader economy as well.
Do you reckon the government's got to make it overly onerous to migrants to sort of meet skills criteria? Traditionally, it's been quite tough. Do you think they'll relax that a little bit because we need such a blend of capabilities now moving into Australia for supporting job growth?
That's a good question. I'm not sure. I mean, it could go back to the end of World War II when we had the 10-pound POM and sort of other.
Well, the Greek and Italian migrants. Huge in the 50s, which in many ways, it was a very tough journey for many of those migrants. Impacted Mediterranean-orientated migrants impacted during World War II come out to Australia, and they, Australia, let's be honest, Australia didn't necessarily embrace them. But if you look back through history, they were the engine room behind such a significant amount of growth for Australia. And I only think of the Snowy Mountains hydroelectric scheme, largely created by those migrants from Greece and Italy during that period of time. So, let's hope we have that same.
Well, I was going to say that.
Sentiment.
Yeah. I mean, you could even go deeper. Yeah. The Snowy Hydro, but, look at some of the most largest companies in Australia, such as Transfield and the like, were born off that, literally a suitcase and a pair of shoes.
Well, yeah. One of the biggest property developers in Australia is an Eastern European migrant.
Yeah, Russian.
It's you only need to look back in history, and a lot of the people who have changed and shaped Australia for the better are migrants, and they come from that era. And look, you can go back even further, and I'm not going to get into a discussion around the first Australians, and which I'm very passionate about that. But we kick stuff off. The English sort of way back when, and we've just had the story of Australia is migration, and I think this is a period of time for Australia to embrace that moving forward.
Well, it will be, but we're also a different nation today. We're very multicultural compared to back then. So I think whichever way it flows, I think Australians will be smart enough to open their arms, to other sectors of the world, and we need it. At the end of the day, we need it for economic recovery.
We do, but let's see how that plays out. But again, this is a property show, so. Yes, there's got to be some impact, but you probably shouldn't. Well, you should be making long-term investment decisions now based on how accelerated population growth as a result of borders opening and also the global experience with COVID. You see a lot of the surveys going out there right now, and New Zealand, I think, is probably number one as the most attractive place to migrate to in the world from America. You got a lot of people going out there going, I want to go and live in New Zealand. Good luck with that. You go back in time 20 or 30 years, send your hate mail. It's the Anzac tradition, mate. I got to do that. It's a lovely.
Do they know there's Kiwis there? No disrespect. It is the Anzac tradition.
But again, Australia is firmly on that list as well. And we've spoken about it. And we've channeled some of the commentary coming out of demographer Bernard Salton. He talks about the Dubai effect. And for that, and conceptually, if you think about the Middle East, which is a complicated and often hostile and conflicted part of the world, there's a lot of people with a lot of money there. If you think of the Lebanon or Saudi Arabia and other parts, where the wealthy park their money in the Middle East is in Dubai. And that's been a big driver of what is a story of probably 5 decades of. If you look at a picture of Dubai 50 years ago to where it is today, absolutely chalk and cheese, and that is the Dubai effect. So Bernard Salt's thesis is that the same thing will apply in Asia, and that is Australia will be the Dubai. This is where people will park capital and they will park opportunity for the future and their families inside of Australia. It's where they will hold their wealth, and it's where they will protect their wealth because of the stability of the system here. Now, we don't need to get into some of the geostrategic issues that are facing Australia. We've touched on this podcast before, but this is good for Australia. This all means that over time, this is not, hey, borders are open up, property's going to spike in 2 months' time. This is the start of a narrative for a new regime of change and growth for Australia, which is going to be generational.
Yeah, and that I was just about to say that this could potentially be a generational moment in time for our kids and our kids' kids. But the one thing that we don't have this time in volume, if we go back to the last cycle, though, is the Chinese investor and the amplification of sort of off the plan purchasing and what have you. Like, clearly that's not there now, and it may not be there for some time. But whilst that is a geopolitical scenario, it does ultimately have an effect on Australian property prices on one side of the ledger. But if you go to the Dubai effect on the other, and we do become that space, there's a lot of wealthy people throughout the world looking to place money. And even though it might be at the top end of the spectrum in terms of price range, there is a sort of a dribble down effect that edifies throughout the whole economy. And so there's only good. I'm actually very excited about the next decade, and I'm sure there's going to be many ups and downs along the way. But what we're coming out of now potentially has never been seen before. The rule book is being redone because it's never been experienced. And that to me is exciting.
It's absolutely exciting. And we're speaking about this, about permanent migration. Now, there's another whole part of this which we need to discuss. We'll just go to break. Stay with us back in a moment.
Do you want to achieve wealth and passive income through property investing? PK Gupta helps a community of over 10,000 investors achieve passive income by buying top 5% growth and simultaneously positive cash flow property using data, without wasting months doing research, spending weekends at inspections, or dropping $15,000 on buyer's agents each time. So, if you're overwhelmed with information overload but don't want to drop $15,000 on buyer's agents each time, check out PK's website, consultingbypk.com.au, and learn to build passive income through data.
Welcome back, everyone. Phil Tarrant having a chat with Steve Waters-Wright Property Group about the restart, the great restart. New South Wales to resume international travel from early November, other states to follow. If you think back to the last year and some of the scuttlebutt, skullduggery, and let's call it out, stupidity of some of the state premiers around border closures, border opening, attitudes towards COVID, managing COVID, I think we're now on a pretty clear pathway to an appreciation of, hey, it's here, it's with us, let's get on with it, let's learn to live with it, let's get Australia started again. Now, we spoke about how pulling the shutters down and letting people back in Australia on a permanent basis will shape the generational fortunes and future for property investment. A big part also, Steve. And I was out, went to the local shops in Kirribilli on the weekend. And Kirribilli, for those of you who don't know, it's a sort of suburb. It's sort of part of North Sydney, I guess you call it. But this time of the year, October, it is one of the most popular suburbs in Australia for looking at jacaranda trees.
Wow,
and,
really?
It's hugely popular. There's jacaranda trees everywhere, and we all know that jacarandas flower at this time of the year. Purple flower is really cool. There's one street in particular, I can't remember the name of it, which is like got heaps of them, right? But it's the most Instagrammable street in Australia in October. Anyway, that's not the story. The story being that I was going, whoa, hang on a second. Who are all these tourists? And there were, because people flooding there, like in normal environments, in a non-COVID lockdown environment, the place hums for about 3 weekends and it's just full. And people internationally plan their trip to Australia as tourists to look at these trees. And a lot of them from Asia. I think there's a lot of people out of maybe Taiwan. There's also China and those sort of areas. And I was going, whoa, hang on, there's tourists around here. And this sort of got me thinking about the opening again of international borders. Yes, there's permanent migration, but the tourism dollar for Australia is a key economic driver. All of those people arriving. I haven't seen a cruise ship in Sydney Harbour for nearly 2 years. In normal conditions, they're there every single morning at 6 o'clock. They come in, they park up. 4,000 or 5,000 people come off the boat. They go and spend their money on food and wine and beer and souvenirs and bridge climbs and Taronga zoos and stuff. The amount of money that's pumped into the local economy, the local economies of Australia and the state coffers as a result of it, as a result of tourism, is huge. You're looking at the tax receipts coming out of this because of the economic growth. So this is another key driver. So where I'm getting to with this is that Australians now, after COVID-19, family balance sheets are as strong as they've ever been before. Australians save more money during this period of time than they have ever done in many, many years, purely because they didn't have a lot of money. They didn't have a lot of things to spend it on. You only drink so much wine and eat so many Uber Eats, right? So people are cashed up, and that's been a driver, and that is a driver now for some of the price growth that we're seeing and APRA intervention to try and slow things down. That'll equalise. But a strong economy means largely and hopefully wage growth, which means people who have a better attitude and appetite towards growth, which typically translates into, I want to buy a home. So economic activity, which can largely be driven by tourism in many ways, amongst other things, infrastructure spending and stuff, will also have a big kicker for property markets.
Without doubt, activity equals growth. And as you rightly mentioned, we need it. We've been dormant now for the better part of, in a broken up way, 2 years. And I think it's exciting times ahead, and I'm very keen and quietly confident to see what happens over the next 12 months in terms of this recovery. And as I mentioned, there'll be ups and downs and sideways, but I think the trajectory will be up.
How upwards is it going to go?
In terms of percentage growth, is that what you're talking about? The asset value?
Well, that was an open question. I wasn't being specific, but you framed it as percent. We've just seen 20% growth nationally, 12 months. Yeah, will that be continue? I don't think you're going to maintain that speed of growth. It needs a temper.
Yeah, you can't. It's not healthy. And even if we did have it, there'll be a definite softening and sideways movement in the future, thereabouts, to get back to somewhere in line with historical averages. But it wouldn't surprise me, however, depending on how the mobility goes across the country, that we could potentially see another double digit for the 12-month period. Wouldn't surprise me at all.
That's pretty big bananas.
Yeah, well, it's once again, it's going to depend on how much mobility we have and what the infection rates do, because that's a part of our now psyche around consumer confidence.
Absolutely, and you need to hark back to before Premier Gladys Berejiklian tendered her resignation on as a result of these sort of corruption inquiries. There's probably 2 or 3 weeks prior to that, she said, I'm not doing my daily press conference anymore around COVID because we need to change the narrative around from how many infections there are versus how many people are sort of hospitalised. It's the impact on the health system. And we only saw that yesterday with the rhetoric coming out of the Queensland chief health person up there saying, yeah, we need to start changing narrative around case numbers to hospitalisation. So we're seeing that right now, and that will change over time, and it will just become a norm where you don't even think about how many COVID cases there are anymore. They don't report how many people get X virus every day. And you remember during the period of the COVID-19 crisis, I think there was 20 other things that more people died of in Australia than COVID-19. So it's all going to become normalised.
Well, we all live and learn, don't we? It's the narrative has changed, but at the same time, I don't think we could have gone into at the beginning of COVID with the mindset that we have now.
Yeah. Do you reckon you're a better property investor as a result of COVID-19, Steve?
I would like to say that it's made no difference in the way that I think. Areas have changed. Methodology is the same. And maybe a left and right of true north looking for those newer trends that, as we've talked about before, eventually become data.
Yeah. Very good. Well, I think we've navigated that pretty well. What happens as a result of border openings? Nice headline for us. No doubt people are asking the question. And no doubt people are probably going to start calling up you guys at Right Property Group saying, well, what's going on? Quick, I've got to hurry up. I've got to capitalize on this. There's going to be people coming. What do we do? What do I buy? Thoughts? What's your counsel to them?
You set up the major milestones first. In today's market, it is really all about finance. Having a plan is great. It's a necessity, but you can't do anything without finance. And that is in the tempo of a market that we have today, when you have finance, that is your one-upmanship card, during negotiations in terms of terms and conditions. It's just one point, but think things through. It's not always this sunny. And we need to make sure that we're planning for the future.
No doubt your Nana told you that. Always plan for a rainy day.
That's it. She was right.
That's what the best investors. Steve Waters, Right Property Group. Thanks for joining us today. Remember to check out smartpropertyinvestment.com.au. Favour for me, please. Please get those reviews coming wherever you listen to it. Most of you on the iTunes player and your mobile telephone while you're driving in the car. So don't do this while you're driving. When you've stopped, can you please leave a review? The team get a real kick out of it. Remember, social media, Smart Property HQ is where you will find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.